Welcome, everyone. We're going to start our session. We're having a little connectivity problems with one of our panel members. My name is Jim Marous. I'm from the Financial Brand and also the digital publication of the Digital Banking Report and also the host of the Banking Transform podcast. I am really fortunate today to have a group of people who all represent small banks and credit unions in the U.S. And what's interesting about this group is, and our discussion today is going to be all around the technology advantage or disadvantages and the digital technology disadvantages and advantages of being a smaller financial institution. I have a number of people on our panel today. I'm going to start in the upper left-hand corner. Australia, you want to introduce yourself?
Thank you, Jim. My name is Australia Hoover. I am the president of CDC Federal Credit Union. That is the credit union that serves the Centers for Disease Control and Prevention employees based in Atlanta. Obviously, the CDC, the fine folks at the CDC have been very busy trying to keep the world safe from this COVID-19 that we're all facing. So I'm proud to be the financial institution that serves that group of people. We are a $350 million in asset credit union. We've got about 20,000 members. We've been in existence 71 years. So we serve the health, life sciences community. And, I think some of the challenges that we've seen recently have a lot to do not only with COVID-19, but just being a smaller community-based financial institution trying to navigate the waters of the environment that we all kind of find ourselves in. So I've learned a lot just listening to a lot of the sessions from earlier today, and I'm excited to kind of share some information and hear from my fellow colleagues on this particular panel.
Charles?
Yeah, thank you, Jim. Australia, good to see you today. My name is Charles Potts. I'm the Senior Vice President and Chief Innovation Officer for the ICBA, the Independent Community Bankers of America. My role is really to help find and deliver mission-driven innovation to the community banks. We actually run our own accelerator program where we bring early-stage companies in to help them really fine-tune and hone their go-to-market strategies around serving community banks. And at the ICBA, we are the advocate that helps create and promote an environment where community banks can flourish. The community bank marketplace constitutes about 99% of all banks in the country, is a physical presence in 1 out of every 3 counties in the U.S., and employs about 750,000 Americans around the country. And I'm pleased to be here today to help support this initiative and look forward to sharing our insights on how community banks are helping advance technology.
Great, Charles. How about you, Ben?
Hi, I'm Ben Maxim, Assistant Vice President of Digital Strategy Innovation at Michigan State University Federal Credit Union. We are the world's largest university-based credit union at 5.5 billion assets, have over 300,000 members, and just opened up our 2 more branches during the COVID times here and are at 21 branches. So we've been around since 1937. So I think just about as long as Australia has his institution. We were founded out of the Great Depression and have, been a community founded out of a desk drawer by a group of investors at Michigan State out of the Great Depression. We've gone through a number of these economic crises during our history. We're looking forward to using innovation and digital strategy to move us through this most recent one.
And last but not least, Kelly.
Good afternoon. I hope you can hear me okay. You got to love technical difficulties when Denver's getting snow shortly after a record-breaking heat day 2 days ago. But nice to see you all. Kelly Wagner-Grull. I am the Director of Innovation and Member Experience at the Credit Union of Colorado. We've been in business for 86 years, founded originally for state employees of the state of Colorado. We serve 130,000 members. And I'm certainly privileged to be able to lead our cultural efforts around innovation and the desire to support new ideas, to crowdsource and foster experimentation, and really helping to drive continuous improvement for our members, for our organization, and really being able to tap into the power of our collaborative industry, which for events just like this, we're able to share and learn from each other, and really making sure that we stay relevant for our members and to continue to show value and be engaged with our members along the lines of what we've done for all these years. So happy to be here. Nice to see you all again.
Thanks, Kelly. As a foundation for our discussion today, I think it's important to review some of the research that's recently been done by the Digital Banking Report. We are in the process of doing 6 different reports in a post-COVID environment or a COVID-impacted environment. And we're seeing a lot of general themes that seem to carry themselves through every one of our research projects. We've researched the future of work, the future and the state of financial marketing. We've looked at innovation in retail banking. We've looked at digital transformation. We've looked at the use of data for the betterment of a customer experience. We've looked at digital lending and account opening. And we've also looked at the overall prospect of what are the future trends and predictions. What we have found is some very key elements that really guide institutions of all sizes. Number one, COVID has moved us all forward digitally. However, it's made all of us feel more insecure about where we are in the digital transformation process. Our research found that while more institutions have done more things to serve a consumer digitally, that because of everything else that's gone on in the environment, each institution as a group have rated themselves lower on innovation maturity, AI maturity, digital transformation maturity. I just did an article this week for the Financial Brand on Monday that showed that while organizations understand the importance of digital transformation, understand what needs to be done to digitally transform your organization, the reality is there's a lot of challenges, and overall our ability to meet the needs that we have set out, such as customer experience, understanding data and AI, looking at digital banking options, we're actually doing worse than we did last year. And I think that's a matter of where we think the tide is. So while we try to keep up, the marketplace has actually moved forward faster than the rest of us. The second key finding was that the overarching item that drove all of this and really can change everything for every institution, and you're going to hear from our panel today, is culture and leadership. If your leadership and culture does not have an innovation mindset, does not realize that the marketplace has completely changed and that the definition of customer experience, the definition of convenience, the definition of digital banking has changed dramatically, it won't matter how much technology you buy, you will not be able to digitally transform. And one of the examples I have is that with digital account opening, we had a tremendous increase in the number of organizations that said they can open an account completely digitally from front to back, from beginning to end. Now, that was really encouraging because we've been mentioning this for years, saying this is a major flaw. But COVID, if you didn't have that capability, you would not be able to open an account. But our findings found that while that ability now is there, both on lending and on checking account new opening, that the time it took to open an account has not changed. It's about 5 to 10 minutes. 5 to 10 minutes on your mobile device doing anything is a lifetime. So while we basically have put lipstick on a digital pig. Thirdly and finally, we found that the organizations that are most at risk are not the biggest, who can invest in themselves out of the problem, or the smallest, which you'll see today, tend to have the leadership and the culture that can really move things forward rather quickly. It's the middle range. Those organizations from 10 billion to the top 5 or 6 in the world as far as financial institutions, they're the most at risk. Why? Because of culture and leadership. So with that, I'm going to talk to the panel a little bit. We've had a prep call, but I'm going to go to Kelly first. Kelly, you're in Denver. You mentioned that the culture of your organization has really made it so you've done some very interesting things as a result of COVID. Can you talk to us a little bit about what you've done since COVID to really get closer to your customers, your members, to really digitally engage with them, and what you're looking at doing in the near term?
Absolutely, Jim. COVID really, to your point, has brought to the surface definitely some of the gaps, right, in the experience and the delivery channels of making sure you're connecting when you don't have the in-person interaction that can happen so easily before. And so you saw, at least our organization, I was proud to see that we had already taken a step towards being willing and open to remote work for our employees, and also looking at how we were staffing different areas of our business. And so when we were forced, obviously, to deliver all digitally, looking and turning towards, drive-ups as becoming mortgage closing locations, the ability for our members to contact us and chat with us. All of those services, which at times can feel like just another channel, became our most important channels, right? We saw an influx of calls coming into our contact center. And so the ability for us to move our work where move the people where the work is or where the members are coming in really becomes key, that you have to be able to shift nimbly. Now, one other thing that the Credit Union of Colorado does that I'm very proud of and love our employees for is we crowdsource ideation ideas directly from our employees. So we have a platform, they share ideas. Obviously, immediately once COVID implications were starting, we opened a campaign and allowed our employees to give us direct ideas and needs about how they could serve our members more quickly, more seamlessly, and to remove some of those barriers really, really swiftly. And so we were able to go complete remote within about 3 weeks of our state mandating us to be serving only digitally. And so I think really leveraging our people and leveraging our employees, the tolerance of our members to say, hey, I've never tried digital banking before, but hey, walk me through it. And one last piece would just say is, although we did some really great things, there's still some areas that are shown, right? Like, hey, how much do we need to have mobile banking or video banking right at our fingertips so members can see and feel and hear us? Which is one of the greatest parts about being a part of a credit union, right? Is that relationship that we build with our members, that they're not just there, they are a person and they have a story and we're willing to listen to that. So I would say it's definitely an affirmation of the steps we've taken to prepare for a more digital experience, but that we continue to still need to look and evolve and move a bit quicker so that we can shift again in the event that another pandemic occurs or we're pushed back into a digital space only.
And Kelly, how long were you completely shut down?
In terms of completely shut down, was no days technically. Now our branches were closed for well over, I believe, was a month and a half, 2 months that we were definitely down. But again, the ability for us to have drive-up locations, it does make you evaluate the locations that don't have drive-ups and possibly shift your strategy to say how important are those ability to serve in that way if we don't have brick and mortar branches that can open without a drive up.
Okay, so Ben, what changes happened as a result of COVID, but how did it change your technology innovation perspective, and what have you done since then?
Absolutely. So, coming into COVID, we were doing a lot of things as an organization to improve our technology stack. We were improving our network capabilities to allow more bandwidth. We were segmenting traffic to get employee traffic away from member traffic so we could better serve digitally. And a lot of those, we also rolled out ITMs and a chatbot in the fall as well. So a lot of those things, unbeknownst to us, become very valuable assets to us as we went through COVID. We were able to go from 100% on-site to roughly 80% remote and 20% on-site still, as our branches had some capability, and we had our call center and e-services teams able to work as well. And really, our focus became on how do we engage digitally. A lot of credit union relationships with our members are relationship based. The banking is relationship based, so we wanted to figure out how do we maintain that. So a lot of the innovation program. So prior to this year, I was our leader of our software development team. Coming into January, switched over to my innovation role in digital strategy. And a lot of the plans, were, on a 1 year, 2 year timeline, and they got, sped out the door the second COVID hit, and we needed to get moving. So we very quickly rolled out a video banking solution that we call Video Chat with a company called Pop.io. We got that out the door in about 4 weeks for our first member contact. We've got a lot of great feedback from members through that channel. It's also helped us very recently when we had our call center and live chat software go down the other day. It was a new channel for people to try, and it kind of forced adoption a little bit further than we were seeing before, and people we got even greater response from that. we're very focused on financial wellness as well. That's another focus of ours in the digital area. How do we help members coming out of this crisis? Because along with the health crisis, we're going through a financial crisis as well, with a number of people out of work or with reduced work or various situations. Another thing we did was create a new product. We call it Savings Builder, which is to help with emergency funding. So there's a stat that's been out there for a few years about how most I think it's 60 or 80% of Americans couldn't cover a $400 expense. So this is a product geared towards getting people to save, that first $1,000 at a higher interest rate, and it goes, the interest rate gets a little bit less after you cross the threshold, but you're encouraged to get that first 1,000 so you have that emergency savings on hand.
So it's interesting in both Kelly's and Ben's perspectives that the innovation process didn't stop because of COVID, because of working remotely, but actually was enhanced because of it, that they basically doubled down, which I think we saw in a lot of cases. And now it's a matter of, can keep that momentum going when you get out of the crisis mode, or do you in some way take your foot off the pedal? Australia, at your organization, you have a single branch. How did it work from the standpoint of working remotely, from the standpoint of being able to innovate and actually build new digital capabilities?
Yeah, I mean, that's just listening to Kelly and Ben, our situation is somewhat unique in that we do have more than one branch, but one publicly accessible branch. The other two branches that we have are on Centers for Disease Control campuses. One of those branches was under renovation when COVID hit, so it was closed anyway. And the other branch has remained closed because, frankly, the Centers for Disease Control employees are working remotely. So there's no need to open that branch. So our one branch essentially has allowed us to continue with our strategy to move toward remote service delivery, which has kind of been at the pinnacle of what we've done from the very beginning. If you could imagine the Centers for Disease Control employees, they get stationed all over the world and have been fighting worldwide pandemics for prior to COVID. And so our service delivery to them includes being able to deliver the services remotely. And so this is just an acceleration of what we have already sort of been accustomed to doing to provide service to our members. But ironically, Ben talked about building a couple of branches. It became very apparent to us that without a drive-through, this situation has caused some serious concern for our ability to serve members who are not comfortable necessarily walking into the one branch space that we do have accessible to them. So I've actually looked at building a branch during this time, and we're going to have a drive-through for the first time in many years, simply because that seems to be what the climate dictates for us. And so I think every financial institution is a bit different, and the membership and the needs of the organization sort of dictate what moves you make. But we're all in the people business. And so we have to find ways to serve people and meet their needs digitally, because that is the environment that we're in and will certainly be in for a long time.
And Charles, you're in a different perspective. You have a situation where you're actually bringing solutions to members and trying to basically have them drink from a fire hose and select the solutions that can best serve them. Did you see that the actual engagement level went up? Did it go down? Did it stay about the same? And most importantly, where was the major focus of what people were most interested in once COVID hit?
Well, and thank you, Jim. So a couple of things, to some of the comments already made. When you think about where many of the financial institutions started out on January 1st with their strategic plans in place and all their initiatives, when the COVID crisis hit, to a large extent, it's like the old Maxim: the best battle plans are thrown out when you meet the enemy. And many of the financial institutions around the country, first and foremost, had to address, how do they take care of their own families? How do they take care of their employees? And how do they take care of their customers? So there was a massive movement to make sure everybody implemented their pandemic plans, but more importantly, really checked, kind of did that inventory of what they had, what was in process, and what they needed to add. And from our perspective, I've made this point that the CARES Act comes along, and on magical night of March 26th, the federal government created some 5,000 plus brand new lenders that never had a clue on how to even talk to the SBA, much less make this new PPP loan. And so that really pressed into service a lot of the automation, the digital first strategies, the end-to-end origination and processing, the workflow management, the electronic signature solutions and capture processes for electronic documents. And this really gave financial institutions a chance to look around, and fortunately, and somewhat opportunistically, we had started this accelerator program under the ICBA, what we call FinTech, and we had finished our second year. And out of the 17 alum that have graduated from our accelerator program, 11 had mission-ready solutions that the banks could take advantage of to help address many of these needs they had in their markets, from the self-help tools, the digital communication tools, the origination and onboarding tools, and to what Ben and Kelly in Australia said, accelerate their business plans, their strategies, some leaping 2 and 3 years of plans in just a matter of weeks, in order to marshal some really good, easy to use, smart technology to accomplish the real efforts of servicing their markets and the communities in a very profound way. And I think, as everybody here on this panel knows, and what we're seeing with the community banks that we serve through the ICBA, is this lessons learned awakening, right? This ability to look at what they did and now continue that march forward, building on top of that in this somewhat new norm, because we're all dealing with digital first strategies. We're all dealing with now digitally native consumers, and this crisis has actually brought about a great awakening in utilization of some pretty profound technology that the marketplace has greatly embraced and is using to do some really great things going forward. And as the proverbial proof is in the eating of the pudding, you just look at the volume of activity done in a 6 to 8 week period of time through the PPP loan origination process, and it was nothing short of heroic. Just a staggering volume. Some community banks doing 500 times as many loans in an 8 week period as they did the previous year, and to a large extent, that's a direct indication of the technology they put in place and embraced in a very, very profound way. So I think what we're seeing and hearing in this kind of sub $10 billion marketplace is a resounding success, that they can take and use this technology and move forward, and they can do meaningful things with it.
So one of the discussions we had in a pre-call was the fact that almost everyone, I believe every one of your organizations right now have the ability to actually, your branches are open. But I believe you also said that your organizations are right now at about running about 50 to 65%, I believe we saw, capacity, that you're running at about that level. With that being the case, how important is it to get a way to have digital engagement as opposed to relying on being able just to do your engagement in the branch? Kelly?
You may be on mute, Kelly, or your mic's out. Yeah, I think you're
okay. I'll tell you what, Ben. Why don't you take this right now?
Yeah, absolutely. Yeah, absolutely. So yeah, I think I mean it's critical, absolutely critical for us to improve that engagement. We have people who never used digital before COVID who are now using digital, and we're opening back up a little bit, and we're getting a little bit more volume in our branches, and they're not completely closed anymore. But those same people, they're still coming to us. The volume has not dropped on digital. They are still contacting us through our call center, through our chat. But they're also still coming to the branches. So, I think we've found a new way to engage with them, and we need to figure out what is the right mix of digital and now, kind of the scheduled social distance in-person options that are now available. And, eventually, what does it look like in kind of that human digital mix where, we can provide some options like video banking, where you can talk face to face, and people really appreciate that. There are some people that, will always just be happy to chat and they don't want to see a person or talk to a person. Think about how we order food. Everyone's really happy to just, put it into an app and it shows up on your doorstep, and now you're very happy you don't have to talk to the person when they show up with it. They just leave it and go. But there are also people that really appreciate that human connection. I think that's been the core of what we've done as community institutions, and I think that's something that that's kind of our value proposition in a way, to get to know you. And some of what we're looking at exploring kind of in our innovation programs and ideas are, how do we maintain those relationships digitally? How do we have those conversations that you have when you're visiting the branch week after week and we get to know you? How do we do that when you're channels only, or even as we've grown as an institution, you're not talking to the same person every time? How do we make it so we know you a little bit better?
I think it's important, though, as we look at this, that as organizations, financial institutions, we rely on our branches. Ben, you've opened two, so you rely on those branches. However, we've got to be careful that if we're looking at the balancing of investments, putting a video teller in a branch versus building a brand new digital app, it's a vastly different proposition. And the reality is, if you're looking forward, you've really got to be looking and saying, have we checked off all the boxes, and are we doing the best with our digital apps? When I think about the way I use my phone, if you want to talk to me about engagement and loyalty and trust, you're going to make it as simple and easy and quick as possible. You're going to be more like the Rocket Mortgage of engagement rather than the standing in line at a teller station or at an auto teller. And that's not to say that's not important. But the reality is, if we're running it at about a 50 to 60% of what was before a 50 to 60%, we're down to about 40% of the traffic that we used to have to see these friendly tellers. The reality is, if you want to be friendly with me, make my app speedy, easy to understand, and provide content that will allow my members to know that I know them, understand them, and are willing to reward them. Australia, you believe in the content marketing thing. You're only a single brand, so it's a little bit less of an issue with you. But the reality is, you're finding new ways to engage that make it so that you can show your friendliness and that you're on the side of the member by doing so, correct?
Absolutely. I mean, and Jim, you bring up a very good point. I think it's important for us to really make the distinction between, transactional efficiency and real engagement. And I shouldn't say real engagement, but other types of engagement, because as smaller financial institutions that tend to know our customer base and our membership at a different level of intimacy, so to speak, versus some larger institutions, I think our use of data and our ability to leverage information about our membership is critically important. And I think, transactional efficiency and the ability to make transactions faster and easier via a mobile application is obviously very important, but I also think leveraging data in a way that is meaningful to our membership is also equally important and can go a long way to solidify the position that community-based financial institutions have within the whole financial delivery space. And so I think that's something that we need to really be cognizant of. And as we build out solutions to serve people, we need to remember that there is more than just the transactional efficiency, because I think that at some point that's going to be, kind of the least common denominator amongst all of us. And so what is going to be the thing that separates one from the other, and why will consumers make choices about who they choose to give their business?
So Kelly, you're back again. Let me touch base with you really quickly. Given what's gone on, how important is speed of innovation right now for your organizations, even though we're out of the what I call the crisis mode? How have you really pushed to have it so that the speed of innovation stays on par with what's needed, given all that there is to do?
Absolutely. Thank you. Can you hear me okay? Making
Yes.
sure. Wonderful. So the speed of innovation, right? I think traditionally, in at least the credit union space, we're fairly conservative, and we really like to be right, make sure that we are right, and that we have 100% ready to go. And so I think my perspective is that continuing to change at the speed of innovation or speed of what the market is doing, right? We're not just competing against our neighboring credit union or bank down the road. We're competing against an Amazon or a Google of the world. And so I think that the temperature of what you deliver to your members can't just be, once we kind of get into the arena, we sit back and go, okay, well, you know what? We launched a new digital banking solution. We're good. Oh, we launched a chatbot. We're good. It's that constant iteration. And something that I commonly refer to is we don't want to get into, paralysis by analysis, which at times can happen when you're a very collaborative industry or even organization, as Credit Union Colorado is, making sure that we're spending our members' dollars in the right way, that we're being thoughtful, but that we're also making progress, right? And that when you partner with things like fintechs, when you partner with digital solutions, these solutions cannot take you 12 months to get implemented. You need to be ready and flexible. You need to have the infrastructure in place to be able to deploy, and being okay that you might only be 80% there, and that you can iterate beyond that to get you to the 100%.
That's great. Yeah.
And definitely being able to, in this case, know that you're not Jim. I'm going to quote you on this: that you're not too small to succeed, because just because you're not going to have Chase's huge robotic bot that is servicing right 24/7, and it can basically tie the member's shoes if they asked it to, that it's okay that if your bot can deflect a percentage of calls from your contact center and not make your members wait on hold, or be able to proactively serve them and let them come to ease if they have a credit card dispute. Those are big wins for a credit union. Those are creating relationships for members. And so, my advice really is that it's constant iteration. It's never sitting down saying, oh, good, we're done. You really will never be done.
And that's
okay, Charles, from your perspective, when we're looking at, all these institutions really have a really good culture and leadership mentality around innovation and digital transformation. When you're working with organizations, however, not everybody gets a go-ahead. Not everybody that wants to do X is able to do X as well as these organizations have. What do you see as being the primary barrier to moving forward with the institutions that you feel get really close? Because I will guarantee you that 80 to 90% of the people that are on the video today, on the event today, have a bigger challenge in moving forward than the people we have on the panel. So what do you see as being a major challenge? And probably just as importantly, how do they get over that?
Great question, and I've stolen the Disney term Imagineering, because to a large extent it's imagination. And one of the things that has happened over the last 6 months is by sheer will, by sheer necessity, many community banks and financial institutions have been shown a way to do things that heretofore they could not imagine. That they had to do these things in order to meet the needs of their market, of their community, of their customers, of their own families, of the small businesses that they serve. So that imagination, that seeing a new way forward, is something that we constantly at the ICBA work on. It's part of why we built our innovation programs, and it's to show community banks this new way, to bring an imagination, a set of ideas that they can grasp hold of, and give them a touchstone, give them a grasp of the possible. And so that spark of creativity, born out of the time of crisis, has actually created a pretty amazing new awakening amongst financial institutions around the country, and there's no shortage of acceptance and involvement. And I can tell you, as I mentioned earlier, we're starting the application process for our third accelerator cohort starting in January of next year. And the level of involvement and enthusiasm and interest and applicants from around the world who want to participate in this market because they see what community banks, credit unions are doing, it's pretty amazing. It's absolutely amazing. And I think to everybody on this panel and everybody listening, there's a lot of great stuff happening. And it's because that imagination has finally taken hold, I think, with a lot of people. And look, it's 2020. I don't care what size community bank or credit union you are. There is no technology barrier anymore. It is your leadership, your vision, your imagination, and your will to service the market that you serve, as we say, in a very high-tech, high-touch way.
Well, it's
And can I
interesting
just,
because, yeah, go ahead.
I was just going to say something that Charles just spoke about that definitely resonates is the ability and willingness, right, to imagine or to allow yourself to ask the question, what's possible? And while I think, Charles, that the stage you have with being able to look across our nation and get some of those really strong ideators, we have an innovation ambassador program that we run internally. So believing in and knowing that your employees are technically one of your greatest assets to both come up with imagination of what's possible. They too should be members, right? And pushing the bar of what their expectations are. And so listening and building up that muscle within your organization, sometimes you have really viable solution in small process tweaks or in the need to really ideate or redefine an entire process. And so, Charles, what I love is that you're doing it on this very large, granular, level and being able to rest it onto organizations. And I think there's a great way to meet in the middle with that style is to also do the grassroots efforts of saying, right, we hire our employees within these small entities to care and to facilitate those relationships, tapping into what their needs are and their ideas of how to make processes or experiences better. Technically, right, a perfect marriage can occur from meeting in the middle with that approach of really saying, what can my employees bring to the table, and letting yourself ideate from there.
The anecdote I love sharing, Jim, is a very, very small community bank here in the state of Georgia did something pretty simple, but also elegant to address handling the PPP loan process that they were facilitating. And one of their longtime lenders walked into the office of the CTO and just sheepishly said, hey, can we keep using this for our other loans? And it was that opportunity, that moment where he saw this thing that they had done and realized that I can open my mind to the possible. And I think we're seeing lots of that around the country right now.
Okay, we're getting close to the end of our time, so we're going to do a lightning round. So I'm going to go around. I'm going to do it visually. Very short answers. I'm going to give you kind of an A or B type situation. So, biggest competitor, top 5 bank or top 5 fintech? Ben?
It's a hard one. I think I'll go with top 5 fintech.
Okay, Australia?
Top 5 fintech.
Charles?
None of the above. It's those other digital technology companies demonstrating ways to interact with their customers.
Kelly?
FinTech for the win on this one, I believe.
Wow, that's interesting. Okay, Ben? Focus on customer. These are either ors now. And Charles, you can't cheat. Okay, so priority, customer experience, or data and analytics?
Customer experience.
Okay, Australia?
This is a tough one, Jim. I'm actually going to go with data and analytics on this one.
Charles?
Absolutely, customer experience. It is what separates community banks from large banks.
And Kelly?
Oh, you should have let me go last. I am going to go with Australia, and I'm going to actually say data analytics, but only because without that, you will lose the customer experience.
I'm sorry. I'm laughing because I'm going, you just took out what I was going to say as being, you can't have one without the other. But I think it's important because we sometimes take for granted data analytics in our research is one of the highest rated importance and the lowest level of success and investment. So we talk a good game, but we're not doing well. In fact, 75% of institutions said they are inept, not adept, at using AI and data to even work on the next best service for a consumer. Okay, we're going to keep going, but we're going to start with you, Kelly, because it's unfair otherwise. So, Kelly, mobile phone payment or plastic payment?
Mobile phone payment for sure.
Charles?
Plastic payment. We have a big underserved marketplace still.
Australia?
Mobile phone payment.
And Ben?
Mobile phone, but I think you can stretch that to that underserved market as well, using not just traditional smartphones.
Okay. When we talk about 2021, what is going to be the more important product? Loans or savings? Ben?
Yeah, I think kind of where we're headed, I think savings is going to be where we're at.
Australia?
For us, it's definitely loan.
Charles?
Yeah, loan demand is, we got a 3-year horizon on loan demand.
Wow. Kelly?
Yes, I agree. I think the loans, and I think the caveat to that one is going to be the creativity of what types of loans are coming. I think we will be seeing some non-traditional types of loans being formed.
I think we're looking at the possibility of some rapid fire short loans at payment areas, things of that nature. Okay, Kelly, next year, worse or better banking environment?
I'm going to go with, I'm optimist, so it's going to be better. I think we're going to learn a lot from this.
Okay, Charles?
Huge opportunistic banking marketplace next year. There's sky's the limit.
Australia?
I'm going to say better, but only if we make it better. But I'm optimistic, and I think it'll be better.
I'm kind of looking at Charles because I'm going CDC. This is my way of saying, how's it look? Ben?
Yeah, I think we'll be in a better place next year. I think we'll make it that way.
Okay, and finally, as our last question, our last up or down type finger, up and down thumb, I should say. When we're looking at overall innovation, speed or success? Kelly?
I think it's going to be around speed. I think it is about how quickly can we ideate and deliver to market versus being late to the game. So I'll go with speed.
Charles?
Has to be about success. Without a goal and an objective in mind, you're just innovating for innovative sakes.
Australia?
I'm going to go with Kelly on this one and say speed. If it were right the first time, we wouldn't be on iPhone 12. We'd be stuck on 1. And so I think you go to market and then you incrementally improve over time.
And Ben?
Yep, I'll agree with that. I think speed's most important, but you also have to listen to your users and make it better each time.
Okay, this wraps it up for us, but I just want to leave everybody with a thought. We now are in September. In March, none of us would think we were going to be in this situation in September. We would think we were going to be well beyond it. We'd be going to see college football games. We'd be seeing pro football games, seeing sports live. We'd be doing a lot of things differently than we are today. As we look forward to next March, I would say we're probably leaning on the pessimistic side compared to where we were last March. I encourage everybody not to leave this opportunity for naught. This is the greatest opportunity in your lifetime and in your career and in your company's existence to innovate, to look at the opportunity we have to work from home and get more done and do more things. And if we don't take this, we're going to fall farther behind. As I might have said at the beginning of this, but I know I said earlier today, Change has never happened this fast, and it will never happen this slowly again. So if you're waiting for the ability to catch up, it will never occur. You're only going to get further behind. I thank everybody for being on the call today and being on the event. Thank you from those people from FinTECHTalents Virtual North America. And thank you to my panel who did a great job. They really are the epitome of what can be done. We didn't have any failures here. Nobody that's sitting back and hoping things happen. A great panel. But also, I want to thank all the people at FinTECHTalents North America for having this first event, this premier event go so well. I was at the event in Europe last year, a little different. I was there in person. But again, thank you everybody for attending and looking forward to next time. Bye, everyone.
Bye-bye.
Have a nice day.